Hello and welcome to our three-part series on all things funds. Today I'm joined by Rob Burdett, who works for BMO GAM. In this third and final video we're going to be talking about red flags when it comes to funds. So Rob, what are the sort of warning signs that potentially it might be time to sell a fund?
I think a manager resignation is, for us, quite likely to lead to a fund sale. That's partly because the trigger puller is the ultimate decider in that portfolio. They may have a good team behind them and we may stay, but we will often have an untainted reserve fund that hasn't got change that we would prefer to invest with. In a multi-manager structure, you have no tax, you have no transaction costs, and we make one change. It's there for all our clients, so it makes it easy for us, if you like. A change in style, unexpected performance, getting too big. Fund gets too big. So we always have a conversation with fund managers about how much money they think they can efficiently run with their type of investing in their particular asset class. So we'll happily say goodbye and move on to something that is more efficiently managed if it gets too big.
Because for managers that run, say, a fund that's over $1 billion, for instance, just a big number, they would say that actually my process isn't being compromised. But it is true, isn't it, that it is harder for them to outperform? Yes,
it's a hand behind your back that is getting tied up ever tighter as the assets grow. And the size of assets is dependent on the market or asset class you're looking at and your approach to investing. And it's also fair to say that the fund managers that attract the most money are probably going to be the best equipped to deal with the compromise of size. So it's not all bad, but we're always looking at the risk and the reward. And if the size of assets is an increasing risk to the performance potential. So some funds will limit the size of the fund. They'll stop market it or even close it to new investors. That sometimes means it comes with a performance fee, so there's an offset as well to be looked at. But I think size is one of the big issues for us.
And appreciate it would be on a case-by-case basis, but when an investor's in an underperforming fund, how long should they give the fund manager the chance to turn the fortunes around?
Yes, I guess it's a tricky one to say, but if I start, so when we buy a fund, I think we hate to sell within 3 years. We'd almost never sell within a year. I think performance on a 1 year basis is almost random. It's not quite that, but we all, as an industry, recommend long-term investing, and that's when the compound interest I've referred to comes through. So I would say, so that's from starting afresh. In terms of underperformance, to your question, if the underperformance is uncharacteristic to what we would expect that manager or that style of investing to perform, then we'll investigate that. And if we're not happy, it could be within a year of underperformance. But by and large, if that's not the case, and styles do go in and out of fashion, only 14% of funds outperform 3 years in a row. So that tells you that you need to wait. I would say really try and be patient, because generally the funds will turn around.
But one fund, quite famous example recently is Neil Woodford, whose performance hasn't had the chance to turn around, and obviously a lot of investors will lose a fair bit of money when they do get their money back at the end. Will start getting their money back at the end of January.
Yes.
What do you make of the whole episode and the sort of lessons that can be learned from it?
Well, as we sit here today, obviously it's in literally days after the fund company has announced their closing and the funds are being wound up. I agree with you. I think that's disappointing. Investors are going to be forced out at a as yet unknown price. But I don't know the true background to the FCA investigation, which I believe is still ongoing. So we can't say with any certainty what's behind the scenes there. And let's hope there's no impropriety, and I'm sure that's highly unlikely, as Neil has a very long-term record of successful investing. However, it links to the size point, perhaps. So I think in just the income fund alone, it got to over 12 billion within 3 years. Sometimes that can create some performance in constantly buying your stocks. It then started to underperform and fell by, I think, 5 or 6 of that billion left. And the reverse can happen. So it can become a sort of self-fulfilling prophecy in terms of underperformance with that scale of assets, but that is incredibly rare. There's only a few funds that get over £1 billion, never mind over 10. So it's a mercifully rare situation. There will be some lessons, but I think there's well over 2,000 funds registered in the UK, so there's plenty to choose from. And if you stay at the smaller end, I think that you get a number of advantages in doing so.
Thank you very much, Rob.